G'day folks, welcome back to another update for natural gas. Now the charts are showing natural gas prices still a continuous downtrend, so the prices are still pulling back, at least on the daily. We'll include some back testing, and that will demonstrate how you could have traded some of these using a couple of strategies in terms of where the price is heading. So don't forget to hit the like and subscribe button to support the channel. In terms of the outlook, as of today, July 7, global demand surge. Natural gas demand is rising globally, especially in Europe and Asia, driven by industrial needs and the growth of energy-intensive sectors like AI and data centers. US supply constraints. Despite increasing demand, US natural gas production is growing slower than consumption and exports, leading to tighter markets and higher prices. The Australian market risks. Australia faces potential gas supply shortfalls on the East Coast from late 2025, prompting government reviews and possible regulatory interventions to ensure domestic supply. ETF performance. Natural gas ETFs like BOIL and UNG have experienced volatility, reflecting dynamic market conditions and investor sentiment. Investment considerations. Investors should be cautious with leveraged ETFs like BOIL and KOLD due to their high risk and sensitivity to short-term price movements. So we always look at the long-term trends first, and you can see here on the monthly, the price is above the moving averages, although it's starting to pull back slightly. On the CCI, it's already broken into that moving average range. That's giving us a slight weakening signal. Not quite bearish yet, but still tapering off at the moment and pulling further to the downside. We did have these fair value gaps. Now, this one back here was partially filled, so we could have further upside possibly. This one here has completely been filled with the action of these candles. And these fair value gaps, by the way, are basically unfilled orders, so we might see some further action further to the upside. That one up there was filled. So again, this one's just a bit of a question mark. Down here, we've got another fair value gap on the monthly. That hasn't been touched yet, so it looks like we're going to see further downside very likely. On the weekly, well, on the trends, we look at the price below the moving averages. That's broken to the downside. Likewise on the CCI, so giving us a bearish momentum on the weekly. And again, I've got another fair value gap there I've highlighted, which hasn't been touched or filled. All these other ones back here have been completed or filled. If I zoom out, yep, that's all been done. Actually, we've got a couple up there as well. So we might see that one up there needs to be, I'll just highlight that. That needs to be completed or filled as well. So we might see further upside. So at the moment, it's midway through. You could go either way, but we don't trade on that primarily. We look at primarily on these trend lines in the moving averages. On the daily, it's broken well below the moving averages, giving us a bearish momentum, and the CCI likewise still on a bearish trend and approaching this fair value gap down here, which we've identified on the daily. Now, if you'll notice here as well, closer in here, we've got a fair value gap there that's been just created last couple of days, and some more up there, and I'll just mark that one there as well, which could be something to look out for. And I'll stop it there because these other ones have all been filled. That one hasn't been filled yet. About 50% of it has. So again, if it breaks through to this one, we're going to see that filled as well. Again, very short term, we might see this one coming up and rebounding very shortly. But again, we don't trade on that alone. We trade on the direction of the moving averages. Now, if we go to the intraday chart, so even if you're trading on the daily, we'll look at the 1 hour chart as a potential divergence. There was no divergence on the monthly, weekly, or daily. However, on the hourly, you can see there we had a bullish divergence, and that broke up, hit that blue rectangle is our 23-38% range. And again, for those new to the channel, we measure that divergence retrace by that 23-38% minimum retrace, and more than 90% of the time it hits that range. Sometimes it breaks right through it, other times it just touches it and breaks further to the downside. This one broke into it and broke again to the downside, so that's how we measure that. Now, in terms of where we are at the moment, there's no divergence that I can see. Just on the hourly, it's still bearish, but notice here it's about to break into that moving average range. So I'd wait for that to confirm either way, whether it continues further to the downside, then you can start placing short orders. Now, in terms of back testing, I've got the short periods back here on the stop loss approach and the average down approach. And I've started both of those back tests back here when the CCI and the price broke below the moving averages on the 24th of June. That's indicated by this period. And since then, you would have taken short positions. Now you can see there, if you let them run through the whole periods, the stop loss approach generated so far 1940, whereas the average down generated 10,205. But do note the drawdown. For example, if I drew a measurement from that high to that low on the profitability of the average down, that dropped by about 28,000 640 points. So just be aware of that. It's 26, almost 27% drawdown. So you've got to be aware of that. And the way to avoid that is always follow if you're trading on the hourly in this case, follow the trends on the hourly. Now back here, you'll notice if you're going short, you would have noticed here we had a bullish divergence, higher lows on the CCI versus lower lows on the price. And you would have closed out your positions, your short positions, when a price broke above the moving averages at that point. And in this case, we had another 23 to 38% Fibonacci range, and it broke into that, as I said, on the previous chart, and then it broke down further to the downside, and you would have taken another short position on that when the CCI and the price broke below the moving average. Again, only if the daily is in a short position as well. And again, you would have closed it out when that CCI touched that moving average range, which would have been, if I zoom in, it would have been near the bottom there of that little range there. Close it out there. Now you would have entered another one there, and that's where you probably would have averaged down possibly. In this case, it went against you, and you probably would have closed it out with a small loss or even a small gain, but avoid going long as it did in this case. Then going short again when it broke it down below on the price and the moving averages at that point. So for BOAL on the monthly, it's well below the moving average band. The CCI hasn't started drawing yet, so we'll just consider that a bearish momentum. You can see there we had a few fair value gaps. They've all been penetrated. This one up here hasn't been completely filled, so just be aware of that. I'll mark that as a possibility to be filled in future. This could take years to play out, so again, don't go placing long orders on that. On the weekly, we had a bullish divergence back here versus lower lows on the price, and again, I've drawn these fair value gaps up here. So we might see a price break to the upside, possibly, could take years. So don't go placing long orders. On the daily, we're in a bearish momentum. Now for the weekly, by the way, we're in a bearish momentum as well, with the price and the CCI breaking below the moving averages, so that's also bearish. On the daily, likewise bearish below the moving averages, and I've got these fair value gaps up here. And what I'm looking for as well is any divergence, and there's no divergence to consider there. Apart from this one, it's already been actioned. Now, if we go to the intraday chart, look at the 1 hour chart for any micro moves, and we look for any divergence on the 1 hour, and you can see there those lows and those peaks and highs are moving in consistent with the CCI and the price. And again, you would have taken short positions when the price and the moving average broke below, and closed it out when the CCI touched that moving average range, and then re-entered again in the next hour and close it out again down to that point there. Notice when you close it out on the CCI, it closes out earlier rather than waiting for the price to break into that moving average range. That gives you an early warning to exit the trade. For KOLD on the monthly, the price is below the moving average band, and the CCI is showing a potential, neutral positioning. So I'd call that neutral to bearish. We've got this fair value gap up here, a very wide one. So we might see a price break up there sometime in the future. Again, I don't know how long it's going to take. Could take weeks, months, or even years. So again, don't go placing long orders based on that. On the weekly, we've got a fresh breakout to the upside on the moving average of the price chart, but also on the CCI. So it's a fresh weekly breakout. And again, if I zoom out, you can see that fair value gap up there that looks like it may be penetrated sometime in the near future or the distant future, hard to say. And on the daily, the price and the CCI are both bullish at the moment above their moving averages. Now that was after this bullish divergence, lower lows on the price versus higher lows on the CCI. And just to demonstrate where that should have been, the minimum target, we'll take it from that low Fibonacci to that high. You can see there it's broken easily through the 23, 38% range, and it's gone up as high as the 61%, which is always a key area in Fibonacci levels. And again, it's pulling back a bit, but it might bounce again further from there. So we'll keep an eye on that. But at the moment, it's already hit our minimum retrace on this bullish divergence. Now, also, if you go to the intraday chart, if you're trading on the hourly, you're looking here for any divergence. The price and the CCI are freshly broken above the moving averages, and moving in conjunction with the daily. So take long trades to be taken only. You would have taken these long trades back here in conjunction with that period back here on the daily chart, and avoid going short, of course. There's no divergence that I can see there. Those peaks and troughs are moving in alignment with each other on the price and the CCI. If I go back a bit, there's still no divergence. So for UNG on the monthly, it's bearish, price below the moving average band. The CCI has broken into that moving average band, giving us a somewhat neutral positioning at the moment, but it looks like it's moving further to the downside. There was a bullish divergence back here, higher lows on the CCI versus lower lows on the price, and that broke up and hit that moving average band. Now we drew a target range there, and that target range was drawn from that low. Now, ideally, you probably should have drawn it to that point, and that automatically broke through that 23-38% range, and I've drawn it up to that high. So it's probably a bit ambitious, but that was a 23-38% of that wider range. So probably not the wisest move. So you always take it back to the recent high before the divergence started. On the weekly, bearish momentum at the moment, both price and CCI below the moving averages. We did have a bullish divergence back here, and we've got this fair value gap up here. Also back here on the monthly, we've got these two red areas, and they're both fair value gaps, so just be aware of those. On the daily, bearish momentum as well, price and CCI below the moving averages, and there's no divergence that I can see there. We had a bearish divergence back here. That's already played out. You can see it's hit our minimum target range. This one broke down well below the 100% retrace level. And if we go to the intraday chart, the 1 hour chart, so again, we're looking, first we look at the trends, that both the price and the CCI are in that moving average range. So it looks like they're going to continue to the downside in the next hour or two. So bearish momentum. The next thing we look for is any divergence. There's no divergence there. Again, that CCI is moving in line with the price. So that's looking okay. And that's a bit of history back there. We had a bullish divergence. So if you're new to trading and would like a deeper dive into simpler explanation of the analysis, we're including a video series, Pizza Investing Plus One, as part of the Pizza Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. And if you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.